Hello, this is Carlos Asilis from Glovista Investments, here to share our market outlook for the week of March the 8th. First, a brief recap on this past week's major macro and market developments. On the macro side, the activity calendar continues to manifest a strengthening of activity momentum globally, including significantly stronger than expected employment reports out of the US, along with stronger than expected average hourly earnings and significant breadth in the US labor market. Similarly, a number of business sentiment indicators out of most of the world's regions, market indicators, have been either at or stronger than consensus estimate levels. Moreover, when we look back at this last week's major developments on the policy front, the Biden fiscal package was finally approved. If we look across the financial market side of the equation, this past week brought about a significant uptick in long-term interest rates. 10-year US Treasury yields edged higher by close to 20 basis points, closing at close to 1.6% on the 10-year. And this was brought about both by signs of continued normalization of activity in terms of the virus infection and vaccination rates, which continue to proceed at a very favorable pace, along with the macro calendar. In addition, the policy backdrop, as we discussed, also looks quite solid going forward. Against that backdrop, when we look at major risk indices, global equities were essentially flat for the week. However, a lot of internal market dynamics were present during the week, with value-oriented sectors significantly outperforming growth. In particular, in the US market context, the Nasdaq Composite closed lower by close to 2%, while the equally weighted S&P index closed up by a little over 2%. Emerging market equities were flat, and the Russell 2000 index, US small caps, closed down 40 basis points. I think as we look ahead, the Glovista team continues to sustain a bullish outlook on global equities, predicated on our expectation for continued acceleration of economic activity. In addition, in terms of our major tilts, includes, of course, overweight tilts in the value-oriented sectors globally, emerging markets, international developed, selected US high-quality growth sectors, Japanese equities, and selected industrials and financials. This coming week, we have a number of indicators, particularly the US University of Michigan Consumer Sentiment Indicator, the Small Business Optimism Index. Thanks very much for your time, and have a good week.